May profits be upon you. We're going to take a look at Aussie yen, the Aussie dollar against the Japanese yen. I'm looking at it the exact same way as I was looking at the CAD yen, the Canadian dollar against the yen, because we're putting a commodity-based currency in the Aussie, which correlates with gold, against a safe haven like the Japanese yen. All right. And as of, let's look at the weekly, you'll see it's the Aussie dollar has been being outperformed by the yen. All right. The yen has been inherently weak because of the Bank of Japan's monetary policy to devalue the yen, but they stepped in last week. And for what do you call we saw some impact, where the yen gained some strength, all right, and stopped, briefly stopped the it's underperforming, being outperformed by the dollar. I mean, but it was short-lived. That little show of strength was very short term. So I think we're going back to take a look here at the Aussie dollar. Now, listen, the Aussie dollar has a interest rate decision coming Monday, right around I think a half an hour before midnight Eastern Standard. They're going to have an interest rate decision there, and I think that's going to turn this thing around. And I think it has the potential anyway to turn this thing around. But what I want you to see is, let's take a look at the daily. Sorry for all the shifting. All right. You can see how bullish it's been. All right. This market. All right. Very bullish. All right. With higher highs and higher lows. That's all you want to see, right? Higher highs, higher lows. Right. And it's these lows and being protected and the highs being taken out, ran for liquidity, right? That I want you to pay close attention to. All right. And in an uptrend, all of the highs are inherently weak and they will be ran for liquidity. Boom. Right? Boom. All the highs being ran and the lows being protected. All right. In this sequence here, we have an impulse and we have a correction. All right. Just like this. Impulse, finally, and a correction. And then a new impulse. That's what we're waiting on. What we're trying to do is look for the area that price will make the higher low, the higher time frame, higher low. This could quite possibly be it. Why would this be it? Because here, excuse me, here we have a demand zone. All right, a daily demand zone, a deep one. All right, right at this area, which I call below the 50% of the trading range from here to here. That's the trading range. It's in discount pricing as opposed to premium prices. And you want to take buys from discount price. And you want to look for your higher low to be made here so you can take a trip with it to make the higher high, to break that weak high and run it for liquidity. That's the goal. That's the plan. You with me so far? All right. So if we go to the 4-hour, this is where we're going to make the money, right? You see the outline of the daily zone here, right? And we also have a 4-hour demand zone right here that price reacted to, boom, 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 all the way up, all right? To break structure all the way up. So there is good reason to believe that price may hold it. This may hold price, all right, that it would be strong enough not to be broken, okay? And as price comes into this zone with lower lows and lower highs on the 4-hour, we see that price did reject and break structure. We had a change of character here. We have a structure break here. All right, that is an indication that price has an intent to go higher. Now, it's not the most convincing uh, uh, break of structure. You know, a candle that was looking like something like this as an impulse, and it breaks all of this and comes up here. You know, that would have been very convincing that price has an intent to go higher. However, we take what we can. Well, as soon as it does this, we take what we can, right? As soon as it does this, I'm down here looking at this demand zone that has formed. It's led to a higher high. It's led to a break of structure. I have a reasonable expectation that price will hold here if it comes back. Here we are. Price came into this zone with a lot of momentum, bearish momentum, right? We're going to see if this zone holds, all right? If it does, and if it times well with the interest rate decision coming out for the Aussie dollar, we're going to look for bullish price action here, and quite possibly the higher low will be established, and we can take this trade to the upside. Now, what the headwinds are here, all right? We need price to break this this supply zone, because there's a supply zone here, right? We mark it like so. You know, I like to take the whole range personally of the bullish candle in these what do you call these instances. All right, that is supply. What I'd like to see is price come up here, react from this, and then break through. If it breaks through, when price comes back to the demand zone that is left behind, this is going to be a high probability trade to the upside. A high probability trade to the upside. I hope you heard me. All right, so we're looking for that bullish price action here. All right, and for now, this would be my TP. All right, for an intraday trade, but for a swing trade, we have to wait until this supply is taken out. We got to wait till that supply is taken out. All right, just like I just described. Right, and then the demand that is left behind here, this is going to be the one you take to the upside. All right, now in the case that price does take this out, all right, does take this demand out, the price crashes through, come on, man, and price crashes through, all right, I'll be looking for price to come down towards the middle of this demand zone, all right, taking out these supply areas. We got a supply chain going here, and I'm looking for the third one here. But if price breaks through, I'm looking for that breakthrough and the pullback to the supply that's behind, and I will take price further down. But I don't want to take it further down until I see it break it close somewhere around the midpoint of this daily zone of demand. All right, I don't recommend taking shorts. All right, I do not recommend taking shorts. Not right now. All right, let's see what we get at this level, and then if it takes out this low, then I'll be looking for price to come back to the area that to the supply that is responsible for taking out this supply. I mean, this demand and this demand. I would like to see that one also taken out, and then we could take shorts from here, which would be pro trend. But I don't, again, because of the positioning, because of the location of price, because we are in discount, do I want to take shorts in discount? No, I want to be taking longs from here. All right, so I want to see some supply taken out. All right, I want to see supply taken out. I'm looking for reasons to get in long. Do you understand? I'm looking for reasons to get in long. It might be a little long from down here, but if you put your Fibonacci retracement tool from here to here, like I'm about to do for you, just let me get my stuff together over here. You put your okay, you just want to drive me crazy? All right. You put your Fibonacci retracement tool on this, you'll see we're below the 50% equilibrium. We're in discount, right? Well into it. And we're at the last level of the Fibonacci retracement tool, the 786. All right, usually when we get breaks and close below this, I start to think price ain't going back up. All right, it's likely that, more likely that price will continue to the bottom. But we have a couple of demand zones down here inside this daily demand zone. All right, that could turn the tide of price. And this is like what I told you. This is exactly what I told you. The price comes down further into this. I'm looking for price to come down to this the midpoint of this demand zone before I start thinking about shorts and whatnot. I want to if it pulls down here and pulls back up, I'm looking for the demand to supply flip zone, and I will take it on down. So we'll see about all of that. First things first, we're going to watch here. Now I'm looking for buys. So be patient. We have the interest rate decision coming up for the Aussie, and we need to be patient with that. We'll see what happens with that. All right, and we have a if this then that plan. If price breaks lower, then we'll look for the demand to supply flip. If price holds here and starts heading up, hey, look for a ride to that high. This is going to be glorious. There's good potential for this to be a glorious move. So we'll see. And please smash that like button. All right, smash that like button if you like what I put down right now. All right, and do check out the rest of the playlist for the week that is coming, October 3rd to October 7th. Go to my YouTube channel and you will see that playlist, and you can play all the analysis for the week coming. And do leave a comment. I want to know which one you like best, which scenario you like best, and I will see you in the next video.